Hello, everyone. My name is Christopher Salzberg. I'm a local realtor here in South Florida, and today we are discussing FIRPTA. FIRPTA is the acronym that describes the Foreign Investment in Real Property Tax Act. And what FIRPTA does is it ensures that the IRS is able to collect taxes due by any seller who is not a United States citizen. Now, FIRPTA comes into play for every real estate transaction in the United States. And we'll discuss why. But it is even more significant when the seller of property is not a United States citizen. Now, FIRPTA, like many government and tax regulations, can be a little complex. We're going to cover some of the basics here, and we're going to look at it from the buyer perspective and the seller perspective. So, first, the buyer perspective. If you are buying real estate in the United States, you must have an affidavit from the seller stating either they are a United States citizen or they are not a United States citizen. If your seller either does not provide an affidavit or is not a United States citizen, and that is known, you must withhold by default. The default action a buyer must take is to withhold 15% of the purchase price, forward it to the IRS with what's called the Form 8288. So, the default buyer protocol when purchasing real estate in the United States that is owned by and being sold by someone who is not a United States citizen is at closing, you withhold 15%, you send it to the IRS with Form 8288. Now, there are some exceptions to this rule, but that is the default. That's the way you know you are always protected. Now, if the seller has taken actions in advance of the sale to get an affidavit of reduced withholding requirements from the Internal Revenue Service, or if the buyer is willing to confirm and attest that they will use the home as a primary residence, some other withholding amounts apply. We're not going to get into all those today. We're just covering the basics of FIRPTA, but the default, you withhold 15% from a foreign buyer's proceeds, send it to the IRS with Form 8288. There are other exceptions, and those exceptions can be used as negotiating tools for a buyer who is buying from a foreign national. So again, those are kind of things to be discussed further with a real estate agent and or your tax attorney, preferably. But that can be used as a negotiating tool. So if you find a home you like, and in Florida, many homes are owned by people from other countries. If you find a property you like, you want to really dive into how FIRPTA works and how it can be used to your advantage in the negotiations as a buyer in ways that would legally reduce the amount of withholding you're required to withhold from the buyer. So it's all about negotiation and leverage from the buyer standpoint. But you, of course, as a buyer, want to protect yourself because although FIPTA collects taxes from sellers, the burden of complying with FIPTA falls on buyers. So it's very important that you have a knowledgeable real estate agent, a knowledgeable accountant, if you are buying a home that is being sold by a foreign national. Now let's look at it from the seller perspective. If you're a seller and you are selling $1 million home, it's kind of unpleasant when you go to the closing table and 15%, $150,000, is withheld from your proceeds. So there are ways you can avoid this. Number one is taxes are paid on the capital gains from a real estate sale. So if you bought the home for $1 million and you sold the home for $1 million, you technically may not owe any taxes under FIRPTA, but you'll have to petition the IRS to have a refund of those funds unless you take actions in advance. Again, there's a lot of things you can do with an accountant by filing proper paperwork with the IRS in advance of the sale, in advance of the closing, which we won't cover here. But the important part is, as sellers, you need to have a real estate agent that keeps you apprised of the ramifications of what FIRPTA does and how it will affect your transaction. Because the worst case scenario, which I've seen sometimes with other agents, is that their seller is caught off guard. They have a 15% withholding they didn't expect, and it's very frustrating. Then they need to petition the IRS to have the funds reimbursed and so on. So as a buyer, if you're buying from a foreign national, you're going to be withholding 15% by default, unless you're willing to work with some other provisions such as attesting you'll be in the home as your primary residence for the next two 12-month periods, and so on. Again, it can get a little complicated, but you can use FIRPTA to your advantage as a buyer to negotiate better terms, better pricing, to help the seller minimize his withholding legally. As a seller, you want to be aware of what your capital gains are from any potential sale, and you want to proactively file paperwork with the IRS through your accountant so that you can get an affidavit from the IRS stating that 15 rather than 15%, maybe it's 5%, maybe it's 0%, depending on the capital gain that will be realized from the sale. So again, FIRPTA applies to every real estate transaction. Even if you're buying from a US citizen, they have to attest via affidavit that they are a US citizen. And these are one, of course, in Florida, many homes are owned by foreign nationals, so this comes up fairly often, but it comes up in every real estate transaction across the United States. So hopefully this helped shed a little bit of light on some confusing and sometimes unpleasant elements of US tax law as it pertains to the sale of property by people who are not United States citizens and people who are buying property that is being sold by people who are not United States citizens. So again, my name is Christopher Salzberg. Hopefully this clarifies the FIPTA Act a little bit for you. And if you have any questions, of course, don't hesitate to give me a call. And thank you for your time today.